Don't do it, guys. Don't place trades based on the information you see over here. This is for entertainment purposes only. Consult financial advisors and do your own due diligence before placing trades. Okay, let's go. I guess I should start saying the date. It's August 20th. It's 1:44 p.m. right now. And this is kind of special because the markets just closed at 1 p.m. here. I'm on the Pacific Standard Time. But the screen of the Robinhood website and app is white because trading is still live for me because I get aftermarket trading. It's one luxury you can have if you have Robinhood. So, pretty eventful day today. Now it shows that I'm down. Over here it shows that I'm down for the day, but actually if you recall on Sunday I was at 31 170 or something like that. So up 30 bucks, big win. I had a nice pop in the beginning of the day, but then it fizzled out. Lost 200 bucks over the course of the day. Now, not too big of a deal though, because I play some good trades. And I'm going to show you what happened here. So, first of all, as predicted yesterday, silver was up and EXK was up with it. So, we had a nice 1.82%, 4-cent rally here. And if you notice, the aftermarket loss was reversed just like we thought it would last night. So that's great. And what happened was the huge option trades that I have, their value decreased a little bit, which is a good thing for me. And you can see right here, they were down $84. So that's good news for me because if I decide to buy those contracts back, then I can buy them at a lower price. It's kind of like selling my car for 50,000 and then in a week or two it depreciates so much I can just buy it back for 40,000, but it's the same exact car. And no damage, no nothing. Same quality car, no matted miles, everything, etc. So that's how it works. Anyway, so that's that trade. So 84 just from that. Okay, it down ticked, and so the value of my portfolio overall increased because it's negative 516, right? I have that liability here. That's how these options. That's how when you sell options, that's how it works out. All right, moving on. Why else am I happy? I'm happy because so there's this company that I got a tip from a friend, and it was not a very good tip. And so, guys, don't ever listen to tips from friends. So he told me about his company Switch, and he was super impressed. And it was at $14. Now it's at 10.47. It was at 14 over here. Look, $14 on August 10, 13. And he's like, yeah, buy this. So I'm like, ah, well, why not? Why don't I just sell a put at $12? And then I'm thinking, it's not gonna go down to 12. It's free money. It's like a week put. But then, you know, because the reason why it was kind of enticing is because their earnings call was during this period, and I'm like, well, we can't drop down, by 20%. That would be ludicrous. And guess what? It dropped down by 20%. So that's a losing trade. I did collect the premium though, which was like 40, 50 bucks or something like that. So that was good. Um, it narrowed the losses I had, but it's not really losses, okay? Because you just have to buy the stock at $12. It ends up being a 10, 30. So I still own the stock at 12. You can see over here my average cost is 1,200 shares. It's exactly one contract. And it's not that big of a loss because of that 40, 50 bucks. I forget the amount. I don't want to look it up right now. And so what I end up doing now is since I have these shares and I was forced to buy them over the weekend, I'm like, well, I'm just gonna sell a call against them at $12. So that's exactly what I did. So for 45 bucks, let's see if I can show you here. Yeah, for $45 over here, I sold a 1116 call against these 100 shares. So I'm collecting $45. So I collected like 40 bucks on the way down. I'm collecting 45 on the way up. Hopefully it's on the way up. If it keeps dogging and it keeps dropping, then I'm going to be kind of in trouble. Although I'll still collect that money. But you can see how that's nearly 1/10 of the value of the stocks already just from collecting premium. So unless this drops down a lot, I'm sitting all right. I'm sitting all right. Hopefully it doesn't. Okay, what else did I do? Let's see. Why don't we just go to the history here? Oh, I'm so new to this website. History. Okay. All right. So there's some pending dividends over here. What I did was I also sold a Cameco put at $10. So Cameco is a uranium company that I really like, and it was selling at it was people were willing to buy it at $10. So I'm like, all right, I'll sell you a $10 put at August 31st, which is not too far away from here. It's getting paid $10 for 11 days, and I just have to put aside $1,000 for that. So that's pretty good percent. If you multiply that by three, that's $30 for my $1,000 per month. So if I can nail three of these trades, that's how much I would get. So that's how I calculate whether a whether an option sale is worth it or not. And to me, it's worth it even if I lose this trade because I get to collect Cameco at $10. So I like the company anyways. And whenever you sell with collateral, guys, you wanna always like the companies that you are selling against. That's that's just how it works. So I like Cameco, and if it drops below 10, fine, I'll buy it at $10, no big deal. Then maybe I'll sell some calls against that and make money just like I'm making money on the switch over here. But I want to own a lot of Cameco. I only own like 200 shares right now, so I want to actually stack those up, but I don't want to stack them up above $10. I want to pay at most $10. So it's a really good way of accumulating shares and getting paid for it, paid for waiting for your price in the meantime. That's how I like to look at it. It's a great way to do it. So we had that chemical put sell, we had the switch call sell, and I made another call sell for January 18th. So I did a lot today, three trades. And the reason why I don't mind, because if you use the same methodology as with the put sell, that's not a very good return over the course of like 6 months, is it? It's really not. But the reason why I don't mind it is because this stock is selling at like $3.30 or something like that. So it would have to run up all the way to $5. I collect all that, and then I would be collecting this premium on top of that by January 18th. So I have 360 shares and I've sold calls against 300 of those dollars. All right. So if we go to that graph again, I'm gonna use that nifty sketching thing. All right, it's gonna look weird for a second, no worries. Okay, so here's what's happening, right? Let me pick a different color, something dark, brown. All right, so the stock is right here at 3, like 30, something like that. So it'd have to run up to $5 by January 18th, okay? And I would collect all that gain for all those 300 shares, okay? That's a lot. It's 300 and some dollars, so $370. And I'm forfeiting the upside from there on those 300 shares. But that's okay because I collect some premium So, it's like more like 500, $5.20. It's like I've sold at 520. All right. So that's how it works. And I'm happy with that. I'm happy with that gain for you. Now, this is an explosive company. If uranium goes up a lot, this is going to really take off on the upside, but I'm taking that risk and just collecting some money in the meantime. I'm not expecting the really big spike in uranium to happen this year. I know it's going to happen at some point, but it's not going to be this year, I don't think. Maybe not even next year. Maybe 2020, 2021, we'll see. So I'm planning on slowly collecting some uranium shares until then. Okay, so these are the three trades I placed today. Very eventful day. Unfortunately, some of the stocks that I own um, lost some value. You can see a lot of green, but the red that's in there hurts a lot. Like for example, Apple dropped a percent, and that set me back $26 here. What else? Let's see. SIG, how much is that? I only dropped $12. I have some options running on SIG too. Three contracts at 250. And so that kind of offsets the losses. You can see today's return was $6. So plus $6 on the options, minus 12 on the equities. Not too bad. And what's notable? Oh yeah, we have C-SPAN dropped a bunch, so that's $41. But I'm still so much up on this company, and it gives really good dividends, so I don't mind it so much. It's a shipping company, it's pretty risky, but it gives such great dividend. Even though they lowered it last year by like 75%, it's still really good. So I loaded up on these shares, and I'm up $200. I might not, I don't know if I should sell it or not. I'm thinking about it. I'm thinking about it. But I'm down $41 on it today. Let's see if we can, it says the dividends here. See, it gives me a nice $20 dividend per quarter. So, all right, let's go back to home. Well, that's it, guys, for today. Three awesome trades. Nothing really in the news worth stating over the weekend. It was pretty uneventful. And I'm not a big news guy, anyways. There's some turmoil going on in Turkey and with the sanctions and wars and whatnot, but it doesn't really affect my trading. It doesn't at all. I found out that most of the things I trade, if not all of them, they don't really care about news. It's just everything is just temporary and nothing really matters. So that's it, guys. That's it for today. Um, a little unusual today, me doing this vlog type of deal at 2 p.m., but I have the time. Rarely I have the time, but I did have it, so there it is. It's out early. I'm not gonna have to do it tonight, but I'll see you guys tomorrow. All right. Peace.